Futures trading involves risk and is not suitable for all investors. Content provided in this segment is meant for educational purposes and is not a solicitation to buy or sell commodities.
Hello and welcome to another edition of the Grain Feed, brought to you by EverAg. This is your weekly news feed for all things grain and all things feed. Each week we bring you updates on the markets with unique perspectives from an amazing team of analysts with the intention of helping dairy livestock producers manage their risk. I'm your host, Jim Matthews, reporting from the home office in Chicago. Joining me today, as always, from Texas, Director of Feed Procurement, Mr. Jake Kingsley, and from way down in Atlanta, Illinois, Director of Buyer Relations, Mr. Verl, no doubt, Prather. Team, how are we today?
Doing all right today, Jim.
Doing good. Hey, the sun's shining and it's February. I mean, it's pretty warm for February, isn't it?
And we've timed that out pretty well, too, because Groundhog did not see the shadow, right, last week. So the sun coming out was well timed because we'll get an early spring because no shadows for that dude. But now we get the sunshine today. Not a bad start to February.
Not a bad deal.
I think we got our butts kicked in January. So, Jake, we're allowed to talk about how cool, in a good way, February has been so far. So just before you give us your Texas commentary, Jake, just throwing it out there.
Okay, I'll save it for the end of the show.
That's very thoughtful. Thank you very much, Jake. Guys, we've got a lot to run through today because we are recording a little past 12 o'clock Chicago time here on Thursday, which means we just had the WASDE report released a little over an hour ago. So we got a lot to run through, mainly being that report. So, Paige, if you would kindly timestamp the broadcast, it is Thursday. It's about 12:15-ish. Again, that WASDE report is out. It has been digested by the markets. We've had some swings back and forth, but things are starting to look pretty red here on the screens. We saw a little bit of bounce in beans. Meal was trying to fight near unchanged. Corn was fighting near unchanged, but we're back to red. So we've got nearby March corn futures back down towards 430 now that this report's been digested a little bit. We've got D's futures still holding near 470 though. And then for beans, we've had March push to the lows towards 1180, whereas Nove is trying to maintain an 1165-ish type of support at the moment. And then meal, that not so stubborn little byproduct, appears to be truly melting down. We are now through $350 a ton on both March and December futures and not letting up in terms of the bears really starting to pressure meal as we push into the afternoon of today's trading session. So, Verl, let's turn to you, sir. Initial thoughts on today's WASDE.
Yeah, well, it's kind of hard to believe we've already seen the second WASDE report of 2024. This year's already scooting by, it seems like. But nonetheless, we've seen just small movements, right, from the USDA as it relates to the domestic balance sheet. The USDA figured that it was necessary to cut corn feed usage by 10 million bushels and soybean export demand by 35 million bushels. As a result, domestic soybean ending stocks jumped by 12.5% compared to last month's estimate and pushed their way over the kind of psychological 300 million bushel mark. Soybean export sales up to this point really have kind of exceeded the pace needed to meet the USDA's old expectation. However, traders are certainly concerned that China may decide not to take delivery upon some of their purchases from the U.S. and instead source the supply from South America, right? Specifically Brazil, as their crop, as it hasn't been perfect, as we've spoke about in the past, seems to be still solid. Heading into the report, though, the main interest was to see what the USDA was going to do with South America's production. I mean, both corn and soybeans, and Brazil's CONAB actually led the day with data and cut nearly 6 million metric tons off their estimate of soybean production in Brazil and 3 million metric tons off of the corn production estimate. While the market, kind of started the day trading CONAB's numbers, the USDA followed CONAB with only a cut of 1 million metric tons to Brazil's soybean production. And with that, they actually revised last year's production up by 2 million metric tons. And so USDA's numbers kind of, took the market attention, and ultimately the positive trade that we had ahead of the report quickly subsided. All in all, the data released today did little, in my opinion, to add clarity to the production questions that remain on traders' minds. Basically, the trader is pretty well convinced that the crop in Brazil is going to be big. The question is how big at this point. But, exports at the ports of Brazil continue to be offered at lower and lower prices. So it seems as if those traders are pretty confident in the size of the soybean crop down there.
I'm glad you brought up the Brazilian estimates, as in from Brazil. Those numbers came out this morning. And yeah, it suggested that we might get a larger cut, I think, from today's bean number from the USDA for Brazil. I think the market was anticipating something closer to a maybe 3 or 4 or 5 million ton reduction in that Brazilian soybean number, especially from the local report down there. So to only cut it by 1 million today, I think if you were a bull on the bean side grasping for some hope, that 1 million ton cut didn't really do you any favors, right? And then you go back to the US side, and we cut exports for US beans because of that, the slow pace that we've had. And as you noted, Verl, it feels like folks are concerned that, our window, maybe it's already just shut. There's already suggestions of the Chinese purchases rolling out towards South American buys, switching from us. We've already maybe have a little bit of PTSD from this. You go back to like last April, where we saw a lot of cancellations. I think more on the corn side. So the fact that it's potentially happening on beans already, or at least we're starting to get little whiffs of this thing, it doesn't feel great. But yeah, you had the market try and digest this. And Verl, you mentioned the idea of having clarity. I mean, the bean market traded lower right off the bat, like you said, then bounced. Now it's back again. The soybean oil market was up 2% at one point today, kind of following crude. So I think that's important for folks to keep an eye on as well, is that the other soybean byproduct that we don't talk about as much directly on this show, it's had a nice little run over the past few days. It's been up like 3.5 cents a pound over the last 3 or 4 sessions after hitting new contract lows last week. And that's also going to inherently add pressure to soybean meal, because folks are buying that oil against the other byproduct, soybean meal. So even though the balance sheet didn't change for meal, it's not a good look for meal bulls today. So things are starting to look a bit more red on that side too. Verl, in terms of the corn side of things, I mean, they did cut Brazilian production by 3 million tons. So at least they cut something there in line of what the markets were anticipating. Whereas beans, they just left it alone. They reduced us on the food, seed, and industrial side up here in the US and left ethanol and exports unchanged. Were you expecting anything from the ethanol side, or even on beans, the crush side? I feel like the grind has been at a pretty good pace, and yet we left both bean crush and corn ethanol production unchanged. Were you surprised by that at all?
So the corn grind, as you mentioned, has been really, really steady. And there's been questions like, hey, maybe we need to raise this demand estimate number for corn specifically for ethanol purposes. However, just a couple of weeks ago, I'm sure you remember the weather in January, we saw a massive dip in ethanol production, and it pretty well flatlined the thoughts that, hey, we need to raise this thing. Now, that doesn't mean we're expecting a decline in corn usage for ethanol at this time. However, it doesn't really entail that we need to see a big bounce higher either. On the soybean crush side, I think that some of the concern here is, as you mentioned, crush has been phenomenal so far. We continue to see records. However, as we pressure this soybean meal market, and if we have greater global competition for exporting soybean meal, we may see some significant pressure on soybean crush margins throughout the rest of the marketing year here. And I think that in itself has kept the USDA a little patient on moving that crush number any higher.
Okay, those are excellent points, Verl. Yeah, I do have to reflect back to, as we started the show talking about our weather situation. January, we had it pretty rough, right? We had a big snowstorm, then you had polar vortex, then you had another big snowstorm up by almost another polar vortex. Not a great stretch for us. And yeah, in terms of some of those plants, then they either shut down and or slowed a lot of their operations. So that's an excellent point to keep in mind of maybe that did at least limit the USDA's ideas of if they should increase any of these numbers at all. So yeah, maybe prudent on their part to leave things unchanged. And also an excellent point, Verl, on crush margins. We talk a lot about the renewable program. We talk a lot about how hot the crush production pace has been, either setting records or very close to setting records every month for the past 4 or 5 months now. That's a good point. Things were a lot more attractive for those guys when you were looking at meal prices at $400 a ton and or higher. And now you've had both byproducts on somewhat of a meltdown here over the last several weeks, whereas beans themselves, maybe that meltdown has been a little bit slower of a trickle. It's still been on a bearish momentum for sure, but it's harder for these guys to buy maybe not as cheap beans and turn them into much cheaper products to sell. So great point on your part. Jake, let's flip her over to you then to talk about this protein, because the ethanol grind is, of course, going to impact the availability of DDGs, and the soybean crush process and aggressive pace they had been on is going to impact the availability of soybean meal. So, Jake, what are you seeing on your side of things in the physical feed markets?
Well, week over week and really over the last several months, basis values and cash values have been very stagnant. I mean, we haven't seen much movement at all here in the soybean meal, distillers, corn basis, any of those things. They haven't moved a whole heck of a lot, but we've been talking about all the things are starting to stack up in favor of the feed buyer, that we should see something of a break in due time. I think today checked off another one of those boxes of some very moderate cuts to production in South America, maybe not quite confirming, but adding some confidence to the idea that we're going to have a crop down there. I think over the next handful of weeks, as they really step into the bulk of their harvest and start to potentially confirm some of those yield numbers and big production numbers, the market's going to have to come to the realization that we are producing a lot of byproducts here in the U.S., and we maybe are running out of places to go with those. I mean, you talked about Verl. Ethanol grind has been right up there at the top of capacity, and we've got a lot of distillers being produced, and yet prices there haven't really broken yet. Soybean crush has been record after record, and yet soybean meal basis really hasn't come down, neither has canola. And at the same time, corn basis has remained pretty firm, even as we have this huge balance sheet and another oncoming crop in South America. So I think we're a few weeks away from starting to see that stuff break down, because we may see China start to step out of this market, make some cancellations like we saw last year. That starts to bring down the steady demand pace that we had on soy and corn. I think that's been supportive of distillers too. And then all of a sudden, the U.S. farmer starting to lose these places to send some of this product. Your corn basis starts to drift lower as a lot of corn starts to move into the domestic marketplace and out of the farmer bin, kind of all at once in a bit of a wave. That then reduces your corn basis. It reduces the input cost of ethanol grind and allows these guys to bring down some distiller values. And we, like you said, we cleared the 300 million bushel mark, that psychological barrier on the soybean ending stocks. So we definitely have the beans to crush. Potential that it's just a matter of days or weeks before we start to see this cash market move in favor of the feed buyer. I think patience is going to pay off here. We're seeing it reflected in futures today, and we've got a really good shot of finally resetting this market after this 3-year cycle of very high prices.
Yeah, I think, Jake, we are almost there, right? When it comes to the soybean side and the soybean meal side, it feels like we're almost there. Maybe the one holdup at this point is just confirming what we're actually going to plant here in the U.S. Because I think, Jake or Verl, we could argue that you could take a decent amount of acreage away from corn this year and still be very comfortable with the corn supply here in the U.S. And that's looking out towards the even following marketing year, right? The marketing year that will start September, October of 2024. So I think you could trim a decent amount of planted acreage there, still have plenty of corn. But on the bean side, I think if you did take off a decent chunk of acreage versus what we had this past year, it might cause still a little bit more hesitation over things could get a little bit tighter again here in the U.S. on beans. So maybe that's our one holding point still for getting over the hump, finally getting out of this pretty vicious 2 to 3 year cycle, like you said, Jake, on the protein side, because we would love to see this stubborn little byproduct trade $300 a ton and not $400 to $500 per ton. So we're getting there. We just got to get over that last piece. And it's interesting, Jake, right? The basis side, futures have done all the work for these guys. You can offer lower flat pricing to a dairyman without having to touch your basis numbers because the meltdown has come here at the board in Chicago. So I think that's been a pretty interesting price caveat to work around when it comes to talking about physical pricing.
Well, and I think that's had a little bit of a direct effect on basis, right? You've had this big meltdown in futures, both in corn and soybeans. And so the farmer producer is getting a lower cash price too. And so the thing that they can really hold out against is basis and try to support their price a little bit by holding on to grain and forcing the end user to pay a little stronger basis to move this product. So that's kind of supported it. It really hasn't raised basis numbers, but it's kept them from dropping, certainly. But at some point, they're going to have to ship this product out, make space for the next crop, start paying some bills. The balance sheets look good. It's going to be tough to prop this thing up for too long, I think.
Yeah, that's exactly right. And again, if you have questions on basis and or how basis works into your total feed price, please reach out and speak to the professor himself, Jake Kingsley, as a grain and feed buyer, but also to Verl, no doubt, Prather, who is working the other side of the market on the basis side as well. So 2 experts here to reach out to on this front. And a huge thanks to you both for joining the show today. It is great to have your insights. We would also like to thank the Everag Insights crew for their support. Thank you to Paige for production magic. And thank you to the viewers for watching the Grain Feed. A quick note, Phil Plourde will be hosting the Grain Feed next week because yours truly will be in Tulare, California at the World Ag Expo. So please come find us in the dairy barn at the World Ag Expo. We'll be there. We've got a big old booth this year. We might even have a couple TVs and a chair, maybe even a couch. Things are going to be wacky. So come out and find us. It's going to be a lot of fun. In the meantime, our contact information is on the screen. We greatly appreciate your feedback. That's all for today. See you next time on the Grain Feed.